Good afternoon, this is Chris Brecher with a Simpler Stocks free video for May 17th, 2016. It's about 18 minutes after the close. I've had big old internet problems today. We should be shorting Comcast. But no, all kidding aside, just a little behind the eight ball here because of the internet problems. Just so you know today, luckily my internet problems weren't from earlier and I didn't get caught short. Just so you know, every morning we have an hour on Simpler Stocks where we sit and we have a half hour before the opening and a half hour after the opening. And basically, for a total of an hour. And this morning, when we were going into talking about the market, let me show you what I'm talking about in here. Where we had the chat room, the forum, the premium videos, I put out alerts. I put out that we were close to breaking down, but we hadn't broken down yet. See this chat room? Chat room is from this 9 to 10 a.m. New York time, where I get on a live chat, and we have a lot of people on the chat now. More than 50% of our subscribers are participating in the live chat, which is unheard of. It's amazing how many. Well, in that chat, just so you know, we were talking about the ESs this morning. We were talking about this negative looking chart, but how many times have we seen the market happens to mess up the most people? And when I came on this morning, thank goodness we weren't stubborn. Not at 9, thank goodness, but right here, I said, watch this line until it rolls over. Do not even think of shorting. Thank goodness I told that, because look at this. Take off every line in here other than the two short moving averages. I use a 9 EMA and a 20, the red SMA, and the ATR trailing stop. Now, just so you know, if you want to know how to use the ATR trailing stop, know this is a broken record, go into Simpler Stocks and go to home. See the premium videos. That's the videos at night that are a little more in-depth than what you're hearing now. We also have this thing, live trading webinars. Tomorrow I'm doing about pin plays right on the close. But what I wanted to show you is then we go to Learning Center. And in the Learning Center, we have all these new member package. You can buy courses, but almost everything. These are the courses really from Simpler Options. The courses we have on this side, when you even do a $7 trial, like you see right here, all these courses are free. And one of them we had in here was Master the Basics, Best ATR Settings. And then the 6th episode was ATR Trailing Cross Stops on how to use them correctly. And you watch now, all of these are between 15 minutes and an hour. That basically it's sort of a chat room format, but I go on for anywhere from 15 minutes to an hour, and then I answer a lot of questions pertaining to it. Now, the reason I'm bringing this up is because look at the ATR trailing stop today. This is the difference between busting out, well, that's being a little dramatic, but really losing your shirt and not. The second the market crossed over this ATR trailing stop, it never was a short till guess what? Right when my internet went down. It's amazing how those things happen. But all kidding aside, the first time you cross an ATR trailing stop usually creates too much of an oversold condition. You have to wait for the next rally. If it's a weak rally, then you can short. But the whole idea is, any kidding aside, is when you see it break up here, and when I was on live, I said, do not think of shorting until we get across. And luckily, the entire day we went up. So the whole idea of that is, here I put ledge trades up here. And what I did is I took all the stocks I screened, about 500 stocks a night, and I built a watch list of bearish charts. Now, the whole idea is I said, but you have to have the market cooperate. If the market goes up, not down, bearish charts are less likely to work. So luckily, I also posted bullish ideas. Thank goodness I did that. One of them I posted a little too late was this ANAC, which was up 36. But look at the rest in here. AGIO, all these stocks just went nuts today. But you always have to look at both sides of the coin. Now, to sum up what happened today, just getting back to it, the market was up. Remember, it always does the thing that will annoy the most people. Market up 19 points, right when nobody expected. Everybody thought we were going to just get trashed, and we go straight up. So we just started up and went straight up. The big advantage of this is this. When this happens, after the opening, it lets you take your finger off the button, so to speak, and not get yourself in trouble. Now, what do I mean by that? Let me just show you. I put up this chart, and you could put any of them, but let's put up EMR. And we were looking at EMR, and I had posted that it looked bad and all this. The whole idea is right here. Thank goodness. I said, don't touch it. If the futures are going up, it's the wrong day to short it. And sure enough, it just kept going. Doesn't mean you have to buy it, but we were showing that as a potential short. You don't short until the market crosses. Now, on the other hand, if you saw this later in the day, and you saw this negative divergence in here, and you saw stock slowly start to die, well, then if the market starts to roll over, that would be the one to do. But in the morning, when you see this straight up move, you should be looking for longs, not shorts, until proven otherwise. So that's the way I look at it. Getting back to it in here, NASDAQ was up. You know, it's sort of funny because you're not used to which way, you're not sure which way the market's going to go. And ironically, it closed up 50-50. Sort of funny on how that works. But when you look at this, you had the Russell up 13, bonds down a point, which they should. Less flight to quality, bonds go down. Gold up moderately, up only 3. Basically, advanced decline up about 1,300. Deposit, what is that, 1,600. Whole idea in here is this is what you're going to have to watch the next couple of days. Put up the overall market in here, and now you have sort of a moment of truth in here, so to speak. So let me give you an idea what I mean by that. We've had all these divergences. You have the transports, which have been looking like they were breaking down. Well, intraday, everybody thought all clear on the upside. I didn't think it was all clear. There are certain times when I just back away. That is the transports. Look at that on the right. Now on the left, I want you to see the ESs and put this on a 195. What do you see today? Today was just one of those rallies from an oversold position, and it's still in this area. Now what you got theoretically is you're starting to get overbought right at resistance. So I'm not just throwing in the towel on the short idea yet. Now the NASDAQ being up 50 points, let me put it this way. Look at the NASDAQ on a daily and look how much it's underperformed relative to the ESs. In fact, we showed a 50% retracement last night on the premium side, on the newsletter. Like, this is what I do. I put in things called email alerts. What I do on there is I post these. And I know this video is going on a little while, but I'd like to explain this. We were showing the index and futures charts. And in here, I showed Sunday index charts. The reason I'm showing you this is something really interesting. Look at the 50% retracement. I hope you can see this. These are the type of charts I show. The NDX is almost at its 50% retracement, where the SPX is 100 points above it. Not just that, but the SPX is half the price of the NDX. That's why I'm nervous. Now, when you take this out, you might ask, why didn't I draw it in here? Because the drawings take forever to erase again on Thinkorswim. But you can see it here a mile away. NQs, you can sort of see the writing on the wall where 50% is if you just divide that in half. Now contrast that to the SPX, 50%, and you can see how high it is relative to this side. That was the whole idea of the warning sign. Now, the only way this can get alleviated, this divergence, is either the ES is going down, because eventually they snap back in line, or the NQ is going straight up. And what were we treated to this morning? Warren Buffett with a 9.8 million share position in Apple. So Apple went nuts. On the other hand, Facebook and Amazon and Google acted awful. Luckily, they started kicking in by the end of the day. Facebook with just a moderate loss, Amazon up moderately, and Google up moderately. But you're going to have to see the NASDAQ kick in or the ESs go down. So that's what we're going to be watching the next couple of days. So I hope you can join us for that $7 trial. Like I said, you get all these chat room where I'm on the first hour. Like tomorrow, I'm going to be just a special entrance the last hour of the day where I'm going to go over how open interest affects options on Friday. So I hope you enjoy all this. Have a great night. I will talk to you tomorrow.